On February 26, 2022, the West thought it pulled the trigger on Russia. But no one realized the bullet was heading straight back toward the dollar. 2 days after the invasion of Ukraine, the US and EU pushed a button they believed would cripple Moscow forever, cutting Russia from SWIFT, but instead of destroying Russia, they quietly set off the biggest shift in global finance since World War II. Because the moment the world saw a major nation's money frozen with a single political decision, something broke, not in Russia, but in the global trust that keeps the dollar alive. This wasn't just a sanction, it was the spark that pushed dozens of countries to start preparing for a world after the dollar. And today, that world is no longer a theory, it's forming in real time. To understand how we got here, how one decision shook the core of the global financial system, we need to rewind. Because this story didn't begin in 2022, it began decades earlier when the world unknowingly handed America the most powerful weapon ever created: control of global money. For almost 80 years, the United States has ruled the financial architecture of the planet. Not through empire, not through armies, but through systems. Systems like the dollar, the Federal Reserve, US-controlled clearing networks, and above all, the mechanism that connects the entire world's banks, SWIFT. Created in 1973 as a neutral messaging system, SWIFT was never meant to be political. It was built as the financial telephone line of the world. Banks used it to send payment instructions, countries relied on it to trade. And over time, it became the bloodstream of the global economy. But after 9/11, something changed. America discovered that controlling the bloodstream meant controlling everything. Sanctions became the new battlefield. A simple line of code could freeze a nation's reserves, stop its banks, choke its economy. For years, this strategy worked perfectly. Smaller nations bent, rogue regimes suffocated. Global markets adjusted. But then came a target unlike any before it: Russia, a nuclear power. The world's 11th largest economy. A major exporter of energy, fertilizer, and critical commodities. Someone who could punch back. Still, in February 2022, Western leaders believed cutting Russia from SWIFT would break its economy in days. They expected panic, chaos, economic collapse. At first, it looked like they were right. The ruble plunged to historic lows, banks saw runs. Investors predicted Russia would default within weeks. But beneath the dramatic headlines, something else was happening. Something the world wouldn't understand until it was too late. Because when the US and EU froze over $300 billion of Russia's reserves, the world wasn't watching Russia, it was watching America. And quietly, in Beijing, New Delhi, Riyadh, Ankara, and Brasilia, a realization spread: if a major power's money can be switched off like a light, then no one's money is safe. That single realization, not the sanctions themselves, was the true earthquake. A fracture in trust deeper than anything the dollar has faced in modern history. And from that moment, a silent countdown began. A countdown to the weakening of the very system the West relied on to maintain global dominance. To understand why cutting Russia from SWIFT was such a turning point, we need to understand the rise of the dollar itself, because the dollar was never just a currency. It became the operating system of the world. After World War II, the United States made a quiet offer to the world: trade with us, bank with us, trust us, and in return, we'll give you stability, and nations agreed. From the ashes of war, America emerged with the largest economy, the strongest industry, and the only untouched financial system. But what truly sealed the dollar's fate was something much bigger: the petrodollar deal. In the 1970s, after the US abandoned the gold standard, Washington struck a monumental agreement with Saudi Arabia. Oil, the world's most important commodity, would be priced only in dollars. Anyone who wanted oil needed dollars. Anyone who wanted dollars eventually needed US banks. And suddenly America didn't just export products. It exported the currency that powered the entire global machine. This system worked beautifully for America. Every sanction, every restriction, every SWIFT cutoff was possible because the world used the dollar as the foundation of all transactions. And for decades, no one questioned it, not even China, not even Russia, not even countries that disliked US foreign policy. Because the dollar was safe, predictable, stable, But on February 26, 2022, the world saw something it had never seen before. A major G20 nation, with nuclear weapons, global trade links, and massive reserves, suddenly found its money no longer belonged to it. That was a line the world didn't expect America to cross. And once crossed, there was no going back. Western governments expected Russia's economy to fall apart in weeks, but they underestimated something. Russia had been preparing for this moment for almost 8 years. After the 2014 Crimea sanctions, Russia realized something crucial: you can't be a global power if someone else can control your money. So Moscow began building an economic survival kit. It reduced dollar exposure by more than half. It increased gold reserves to over 2,000 tons, one of the largest in the world. It built Mir, a domestic payment system to replace Visa and MasterCard. It developed SPFS, its own SWIFT-like system. It increased energy trade with China and India. And most importantly, it strengthened political ties with countries that were tired of Western dominance. So when the sanctions hit, Russia didn't fold. The ruble crashed, yes, but only temporarily. Within weeks, it rebounded. Within months, Russia gained back more than it had lost. And the world noticed something uncomfortable: if Russia could survive, what about China, or India, or Saudi Arabia, or Brazil? If a G20 economy could absorb the biggest financial punch in history, then maybe the dollar wasn't the unshakable weapon everyone believed it was. This wasn't just a Russian victory. It was a psychological shock for the entire world. Every global system survives on one thing: trust. Trust that your money is safe. Trust that your reserves can't be frozen. Trust that rules apply equally to everyone. On February 26th, that trust cracked. Countries asked themselves a terrifying question: if the US can freeze Russia's reserves, why can't it freeze ours? China saw itself in Russia's position. Saudi Arabia remembered past political tensions with Washington. India saw the vulnerability in relying on dollar-based trade. African and South American nations feared losing sovereignty. Because here's a truth the West didn't expect: most of the world does not want to be politically dependent on the US, and once these countries saw what happened to Russia, they didn't protest, they prepared. Quietly, carefully, strategically. While the West celebrated the sanctions, the rest of the world began working on something far more consequential: insurance against American financial power. And that insurance would take many forms. The real damage wasn't seen on TV. It happened behind closed doors, inside central banks, energy ministries, and trade councils across the world. Here's what unfolded over the next 24 months. 1. Gold buying exploded to the highest level in 55 years. Why? Because gold can't be sanctioned. It can't be frozen. It can't be digitally erased. Central banks, especially those outside the West, began unloading US treasuries and buying gold at historical levels. This wasn't a trend. It was a global vote of no confidence. 2. BRICS transformed from a discussion club into a parallel economic bloc. BRICS nations began building payment systems independent of SWIFT, increasing local currency trade, discussing a commodity-backed settlement unit, expanding the group to include Saudi Arabia, UAE, Egypt, and Iran. Suddenly, BRICS wasn't symbolic. It was a counterweight. 3. Energy markets broke the dollar monopoly. Russia started selling oil to India in rupees, China in yuan, Turkey in lira, Middle Eastern states in gold-backed currencies. Even Saudi Arabia began accepting non-dollar payments, something unthinkable a decade ago. 4. Dozens of countries built their own payment systems. China's SIPs expanded. India developed UPI for global use. Africa created regional digital settlement systems. Latin America explored a shared digital currency. The world no longer trusted one pipeline. So it built many. The US tried to reassure allies. Treasury officials argued that Russia was a special case. European leaders insisted the dollar was still safe. Economists claimed nations had no alternative. But these reassurances didn't work, for one simple reason: once trust breaks, logic doesn't matter. Emotion does, fear does, and the fear was real. Countries didn't need the perfect alternative to the dollar. They just needed something safer than depending on a system that could be weaponized overnight. The reality was unavoidable. The US used the dollar's power. The world saw it, and the world decided it needed an escape plan. The shift didn't happen through revolutions or speeches. It happened quietly, through spreadsheets, trade agreements, and central bank strategies. A slow, silent, irreversible move toward a multipolar financial system. A world where the dollar might still be important, but no longer untouchable, no longer unquestioned. No longer the single point of failure nations must depend on. History has a way of repeating itself, especially when it comes to global currencies. What happened to the dollar after the Russia sanctions wasn't new. It was the latest chapter in a very old story. Every dominant empire, from Rome to Britain, followed the same pattern. 1. They rise through economic strength. 2. They gain global trust. 3. Their currency becomes the world standard. 4. They use that power aggressively. 5. Trust begins to erode. 6. Competitors build alternatives. 7. The global system slowly shifts away. The US didn't invent this cycle, it simply re-entered it. And cutting Russia from SWIFT wasn't the beginning of the end. It was the moment the world realized America had crossed step 4, the moment global trust began moving quietly to step 5. Because financial dominance isn't lost through war or elections. It's lost through overuse of power. Let's rewind to understand just how closely history aligns. In the 19th century, the British pound was the undisputed king of global finance. London was the world's banking center. The British Navy controlled trade routes. Colonies relied on the pound for everything. But during World War I, Britain weaponized its currency and financial systems. It demanded compliance. It punished enemies. It pressured allies. Sound familiar? By the 1920s, trust in the pound began to fade. Nations quietly diversified. Banks reduced exposure. Trade partners sought alternatives. It didn't collapse overnight. It decayed gradually. By the time World War II ended, the British pound wasn't the world's anchor anymore. It had been replaced by something more stable, more neutral, more trusted, the US dollar. And now, nearly 80 years later, the cycle is turning again. Let us break down the data showing how fast the world is shifting away from the dollar, a shift accelerated dramatically by the Russia sanctions. These patterns would have taken decades to emerge naturally, but now they're unfolding in just a few years. 1. The dollar's share of global reserves has fallen from 70% to 55% in just 2 decades. This decline isn't random, it sped up after 2022. Countries are reducing their dependency specifically to avoid being the next Russia. 2. Gold purchases by central banks hit their highest level since 1967, the last time the world bought this much gold. When the British pound was collapsing and nations prepared to switch to the dollar, history is repeating itself. 3. Global trade in local currencies has grown 560% since 2015. Energy deals in yuan. Food deals in rupees. Industrial deals in dirhams. This isn't experimentation, it's transition. For SWIFT's monopoly is weakening. More than 40 countries have joined alternative systems. China SIPS, Russia's SPFS, India's RuPay Plus, UPI Global Link, Middle Eastern cross-border systems, African digital settlements. These weren't meant to replace SWIFT until SWIFT became a weapon. Now they're insurance policies, soon to be primary tools. 5. BRICS expanded into an economic superbloc with the addition of Saudi Arabia, UAE, Egypt, Iran, and Ethiopia. BRICS now includes 46% of the world's population, 36% of global GDP, 44% of global oil production. This isn't a symbolic group anymore. It's a parallel economic world, a world increasingly uninterested in dollar dominance. The US didn't just freeze Russia's reserves. It froze the world's belief that reserves are safe. And once that psychological barrier shattered, the consequences spread faster than any sanction, trade war, or military conflict. Here's the truth. The dollar wasn't destroyed by economics, it was weakened by fear. Countries didn't move away from the dollar because they hate America. They moved because they hate vulnerability. Because as long as the US controls the global financial system, it can freeze assets, block transactions, seize reserves, disable banks, punish entire economies, pressure governments. That level of control is too much power for any one nation. And once the world realized it, the diversification began, not loudly, not aggressively, but silently, which is even more dangerous. Because silent shifts don't reverse, silent shifts don't negotiate. Silent shifts don't ask permission, they just happen. The world isn't replacing the dollar with another single currency. It's moving toward a basket of competing systems, each with its own sphere of influence. Here's what that world looks like. 1. The US dollar remains powerful, but no longer absolute. The dollar will still be used in Europe, Japan, Korea, Australia, Canada, and global markets. But not as a monopoly, as an option, and the difference between an option and a monopoly is the difference between power and dominance. 2. The yuan becomes the Asian settlement currency. China isn't trying to make the yuan the new dollar. It's trying to become sanction-proof. By settling more trade in yuan, it reduces vulnerability and increases influence across Asia, Africa, and the Middle East. 3. The Middle East pivots to multi-currency energy pricing. Saudi Arabia, UAE, and Qatar will likely accept yuan, rupees, dirhams, euros, and eventually digital currencies backed by oil or gold. This ends the petrodollar monopoly, the core of US financial power since the 1970s. 4. BRICS creates commodity-backed settlement units, not a single currency, but a digital settlement system backed by oil, gold, natural gas, wheat, rare minerals. This is the opposite of the dollar, which is backed by debt. These settlement units won't replace the dollar, but they will neutralize its power. 5. Global trade splits into financial blocks. For the first time since World War II, the world is dividing into dollar zone, yuan zone, BRIC zone, digital regional zones. This isn't a collapse of the global system, it's a decentralization, a diversification, a correction. And it was triggered not by economic collapse, but by a single sanction decision. For decades, the dollar had something no other currency had, the perception of neutrality. No matter what happened in the world, the dollar was the safe place. Even during crises, money ran toward the US, not away from it. But freezing Russia's reserves shattered that neutrality. The dollar is still strong, still valuable, still dominant, but no longer neutral, and without neutrality, you lose the safety premium. And without the safety premium, you lose automatic trust. This psychological shift is the real story, the one no headline fully captured. And it's the shift that will shape the next 20 years of global finance. If the dollar is no longer the unquestioned center of global money, then what comes next, and more importantly, who benefits? Because the answer isn't simple, and the new financial world being built right now is far more unpredictable, fragmented, and competitive than the one we had before. And the final part of this script reveals exactly how that world will look and what it means for every country, every business, and every ordinary person. Most people imagine the end of dollar dominance as a Hollywood-style collapse. Markets crashing, currencies imploding, chaos everywhere. But real empires don't fall in explosions, they fade in transitions. The end of the dollar era doesn't mean the dollar disappears. It means the dollar becomes one currency among many, not the center of the world. In this new system, power doesn't come from controlling a single pipeline. It comes from being indispensable to a network. And right now, the world is building multiple networks at once: digital currency networks, regional payment systems, BRICS commodity-backed systems, Asia-focused settlement systems, Middle Eastern multi-currency energy platforms, African interbank digital rails, Latin American regional clearinghouses. It's a world without a single financial king, a world of competing architectures. But to truly understand where this is going, we need to break down the three forces driving this new era. 1. The geopolitical shift. Multiple powers, multiple systems. The global balance of power is no longer bipolar or unipolar. It's multipolar. The US still leads in innovation, technology, and finance. China leads in trade and manufacturing. Russia leads in energy commodities. India leads in digital payments. Middle Eastern states lead in oil and logistics. Africa leads in mineral resources and demographics. Europe leads in regulation and standards. This means one simple thing: no single nation can control the global financial system anymore. The US can no longer dictate rules unilaterally. China cannot replace the dollar. BRICS cannot create a new global currency overnight. Instead, each region will build a system that suits its own needs and then connect selectively with others. This is exactly why cutting Russia from SWIFT was so consequential. It accelerated the transition from one system everyone must follow To multiple systems no one fully controls. 2. The technological shift digital currencies break old rules. There's another factor reshaping global money, one even bigger than geopolitics: technology. Central bank digital currencies, CBDCs, are not just digital cash, they are programmable settlement units that bypass traditional systems. For example, China's digital yuan can settle cross-border trades instantly, without SWIFT. India's UPI and digital rupee can settle transactions with Singapore, UAE, France, and more. Middle Eastern countries are building digital clearing systems for oil trade. Africa is creating digital settlement layers for regional commerce. Brazil is launching DREX, a tokenized real for business and banking. Once digital rails connect directly between central banks, the need for SWIFT, correspondent banks, or dollar intermediaries shrinks dramatically. This doesn't kill the dollar, but it dismantles its monopoly on global settlement, the core of its power. And this technological shift is happening far faster than anyone predicted. 3. The psychological shift. The world's trust has moved on, and now we come to the most important force of all: trust. The dollar was never powerful because of military force or economic size alone. It was powerful because the world trusted it. Trusted that reserves were safe, trusted that politics wouldn't interfere, trusted that the system was stable. That trust died in 2022, not just in Russia, not just in China, but across Asia, the Middle East, South America, and Africa. And once global trust breaks, it rarely returns. Because nations don't gamble with national security. They don't gamble with reserves, they don't gamble with vulnerability. And because of that, the move toward a decentralized financial world is now irreversible. The world isn't moving into chaos, it's moving into complexity. And there are for realistic futures the global system is now heading toward. Future 1. A multi-currency world. The dollar, yuan, euro, rupee, and regional currencies coexist, each dominating their home regions. It's like the tech world. Apple dominates one ecosystem. Google dominates another. Samsung dominates another. Competition replaces monopoly. This is the most likely future. Future 2. A commodity-backed bloc inside BRICS. Not a global currency, but a settlement mechanism backed by oil, gold, natural gas, rare minerals. Countries settle trade in this unit, not the dollar. This is designed to protect BRICS nations from sanctions. Future 3. Digital interlinked currency networks. Imagine a world where India's UPI connects with UAE's digital dirham, China's ECNY connects with Russia's digital ruble. BRICS connects digital settlement systems, Europe connects instant bank-to-bank transfers, Africa uses a unified digital rail across 30 nations. In this world, banks don't need SWIFT at all. And if you don't need SWIFT, you don't need the dollar for settlement. Future 4. The gradual soft landing of the dollar. This is the least dramatic but most realistic path. The dollar remains important, maybe even the strongest currency, but it loses its monopoly and coercive power. America still leads global finance, but it leads through cooperation, not control. These shifts may sound abstract, but the consequences are real and long-term. Here's what the next decade will look like for ordinary people around the world. 1. More expensive U.S. borrowing. With less global demand for dollars, U.S. debt becomes harder to finance. Interest rates rise over time. 2. Slowly rising inflation. Not hyperinflation, but persistent inflation. Because the U.S. can't print money without consequences anymore. 3. More competition in global trade. Nations can bypass Western financial pressure. New trade routes emerge, new alliances form. For higher global instability, but also higher opportunity. Transition periods always feel chaotic, but they also create new winners, new industries, and new financial hubs. Think Dubai, Singapore, Riyadh, Istanbul, Mumbai, Shanghai, Sao Paulo. The next financial centers may not be in the West. 5. A world where no single country can dominate others financially. This is the biggest shift of all. Sanctions won't disappear, but they won't be universal. The era of global financial coercion is ending. And it all began the moment Russia was cut from SWIFT. 1. Cutting Russia from SWIFT didn't destroy Russia, it destroyed global trust in the dollar. The world realized that reserves could be frozen instantly. And once trust broke, diversification became inevitable. 2. The world isn't killing the dollar, it's escaping dependence on it. A monopoly is being replaced by a network, and networks are harder to control. 3. The next global currency won't be a single currency, it will be a system. Digital, decentralized, and multipolar, no single country will dominate it. Every empire believes its currency will last forever. The British thought so, the Romans thought so. The Spanish thought so, but money follows trust, not power. And in 2022, the United States didn't lose power, it lost trust, and trust is the foundation of every financial empire. Once it breaks, it never returns the same way. The world has already moved on, quietly, strategically, irreversibly. The post-dollar era has begun, not with a crash, but with a shift so subtle most people won't feel it until it's already here. If you found this breakdown eye-opening, if you want more deep-dive stories about money, power, and global shifts the mainstream never explains, make sure you subscribe and stay with this channel. Because the next decade will rewrite the rules of the global economy, and understanding these changes is the greatest advantage anyone can have.